Here we go. Now, after all of that, I'm gonna let y'all come on back in. I just started it back up. Okay. Now y'all come on back in now. Okay. All right. Y'all come on back in. I was talking to myself last time. Last time I was talking to myself. Could nobody hear nothing, could nobody see nothing. You know, I was running late trying to help my son get his project together. Uh, you know, you can't ask a videographer to help you record something halfway. So I ain't boy. I'm on time. I ain't never late. Check it out, boy. You like the shirt? You like the shirt, boy? Can you see the whole thing? You like the shirt? You like the shirt? Merch coming soon. Tell me how you like the shirt, boy? Okay, what's up, Uncle Charles in the building? What's up, Draco in the building? Boyd in the building. Taryn, Taryn. I showed my wife that Taryn. I can't remember how you said it pronounced for real, but it was yeah, you right. It was way off. So when I put up this poll, it was 55 people that said they wanted me to do the charting class. It you like the walkway plan won hands down, but 55 people said they wanted the charting class. And then when I put up the poll to see who wanted to do the charting class today or wait to next week, 75 people said they wanted to do it today. So more people said they wanted to do today than people who actually voted for it. So that means somebody at the double dipping. Y'all double dipping in the ranch sauce, man. Y'all dip, bite. Somebody double dipping, man. Because more people voted for today than was it Trinicia? Yeah, I think that's what Trinicia. Yeah, it was off. But yeah, we gonna get into it, man. Today we talk about charting levels, and it's a million people that can talk to y'all about charting levels, man. It's a million people that can talk to y'all about charting levels. So what I wanted to do, I wanted to talk about levels in like a different way. I want to break it down as if everybody brand new, um don't know what it is, break it down in that way, and then kind of go into how I do it. Cause if y'all want to know how to chart levels, there's a million people that can teach you that. But I'm all about getting the understanding about what's going on. Y'all already know what time it is. If you do something, put it in the chat. Put your information in the chat, and Uncle Charles say everybody double dipping. Put your information in the chat. I got a crazy delay, so I'm gonna stop looking at the chat because I'm gonna be responding to stuff that I said like 5 minutes ago. But put stuff in the chat. Uncle Charles in the chat. Big Draco in the chat. Boyd in the chat. If you do something, put it in the chat. Finance on Fleek. Prophecy. I always mess that one up. Put it in the chat. Wall Street Consortium. Put it in the chat. Stocks to Freedom. Stock Queenie, put it in the chat. P Dub Consultant, put it in the chat. Stock Zay, Learn with Lex, Trading with a Dummy. Yeah, everybody just put it in the chat. If you do something or know somebody that do something, put it in the chat. Each one teach one. So let's go ahead and get into it, man. I'm gonna switch over to the slides with me in the slides. Right there we go. Ain't got my little. Where's my little it should be good. Hopefully everything be enough. We're gonna get to the slides. What we talking about today? We talk about levels. Before we get into the levels, let's y'all know what I got to do. Y'all know what I got to do. I got to get to the disclaimer, man. I am not a financial advisor. Say it with me. I am not a fiduciary. Nothing I say should be taken as financial advice. You need to do your own research. That's why we're doing these lessons, these lives. Investing involves considerable risk. You should always consult a financial advisor before making any investment decisions. Now, with that out of the way, should I say, what we talk about today? We talking about levels, levels in her cousins. Why I say levels in her cousins? Because this is what we're gonna talk about. We're gonna talk about levels. What's levels? Some people call it support and resistance. I just say levels, right? We're gonna talk about supply and demand zones, and we're gonna talk about pivot points. Reason why I say is levels and her cousins, cause they all pretty much talking about the same thing, just in a different way. Kind of like in the Bible, when you read the books of the Bible, they talking about the same story, just from a different person point of view, or they got to the destination a little bit different. Like you took 53rd Street and they took 72nd Street, but both of y'all ended up at the Waffle House, talking about the same thing, just a different way of doing it, right? So let's keep on moving. Let's keep on moving on. Boom. Levels. This is what I trade levels, right? I'm a levels trader primarily. But just like anything, you don't do just one thing. You have stuff that's in your bag of tricks. Levels is the first thing I reach for in my trading strategy, right? What are levels, right? Levels is a area on the chart, a price area on the chart that's represented by a single horizontal trend line drawn at a single price. So it's going to be a horizontal line on the chart at $52, just one line. Boom, you mark that on the chart, and we're going to get into why you mark it on the chart, right? So that a level or support and resistance is marked by one horizontal trend line on a chart at a single price, right? That's what the level is. Wicks or no wicks? That's the age of that's the age old question. Wicks or no wicks, right? Some people say include the wicks. Some people say put it at the body of the candle. I say back test your asset and see what your asset responds to with the highest amount of repetition. Do it respond stronger to the body closures? Do it respond stronger to the wicks? So if your asset responds to the wicks, include the wicks on your levels. If your asset tend to ignore the wicks but is more dependable at the body of the candle, and I get into what I mean by dependable in a minute, in case you don't know, market at the body of the candle. So that's up to you. I can't tell you how to do it. I can only tell you how you got to learn how your asset performs, right? So whatever asset it is, back test that asset and see where you need to be marking those levels at. So that's a question you got to answer with your asset. Support becomes resistance, and resistance becomes support, right? Let's get into that part of it, right? So here we go. I'm gonna shrink this down a little bit. So go back, Tim. This ain't my pitch. I got this off the internet, but it's a perfect representation of what I'm talking about. You got a single horizontal trend line right here, right? Can y'all see my arrow? Y'all can't even see my arrow. I'm acting like y'all can see my arrow. I'm on the wrong screen. You got a single trend line right here, right? And it's a horizontal trend line, and it's marked off at one single price, right? It's support when the asset is coming down to it, like this right here. You see when the asset comes down, it bounces up, comes down. It's support at that area, but it's resistance when the asset comes up to it. That's what I mean by support becomes resistance, and resistance become support. So if it's coming up to that area and it responds to that area by going down, that price is acting as resistance. If it's coming down to that area and it bounces up off it, that price is acting as support. That's what I mean when I say support becomes resistance and resistance becomes support. And then we'll get into the wick part of it when I'm gonna share my screen, and we're gonna get into the wick part of it, because this is done off of a line chart. And then one thing, like a lot of people like to use is a line chart. I like to use a candle chart, but if you use a line chart to draw your trend lines, the line chart is going to be giving it to you at the body closures. That's the line chart don't include the wick. The line chart just gonna be giving it to you at the body closures. So just know that. Boom. Supply and demand zones. I do not trade supply and demand zones like in theory, because with and I explain the difference I see in it and why. Supply and demand zones. It's a rectangular line. I mean, it's a rectangular shape or two trend lines that's drawn to include a price range, a certain price range. And I don't really this is why I don't really trade it, because it's based off of what people call institutional candles, right? They call them institutional candles. And if you look over here on the chart right here, see this big red candle right there? Anytime you see a massive candle like that, some people like to call it institutional candles. And so the supplies and demand zones are based around that drastic movement by the institutional candle. So when you got like an area of consolidation, or like an area of consolidation, and then it blasts off, then that can be an area where a supply or demand zone is being formed. So they'll draw it based off the candles right before that movement to make that supply zone. And I typically just lean toward like just drawing my level and going like that. But I don't really do the supply and demand zone, but I want to include it in this because it's a type of levels. It's a type of levels. No, it's not that I don't like the institutional candles. It's just that I don't like to use it based off of like a single reaction at that time, because if I wasn't paying attention that day, it could have been some news that made that big candle and not really real price action, so I just like to chart my levels based off that one level and keep on going. It's not that I don't like the institutional candles, it's just that that's just not my trading style. Supply zones, they can signal a possible reversal to the downside, because it's like when the price increase too much, the demand start to decrease, because people are okay, I ain't gonna pay this much for this, and the demand starts to decrease, and so you have to start putting it on sale. When you got too much of a supply, like when you go in the store and it's too much of a supply, you got to start putting it on sale, and then people be like, oh, it's on sale, and then they start buying it again, so the price starts to drop. You know what I'm saying? Because they start to put it on sale. So when the price increased too much too fast, or increased, not even got to be fast, once it increased too much and people don't want to pay for it, then you got to put it on sale and they start selling it. A demand zone can signal a possible reversal to the upside, because when the price decrease, you know what I'm saying, too much, everybody be like, oh, this on sale. So the demand starts to raise, and then it starts to perform a demand zone. It starts to form that demand zone, and people start buying, and then the price start going up, and that's how you get the supply zones and the demand zones. And then this another thing that I didn't make this as a picture, I got off the internet too. So as you see over here, it had a big institutional candle come here, and so they drew the supply zone across there. They encompassed that candle over there. Then as it came down, it's right there. You got one forming right here, because price reacted with a big y'all can't, I'm on the wrong screen. So it included this candle over here, and it had the big institutional candle. So they made this the supply zone up here, and as price came down and it came back up, they had another reaction with a big institutional candle. So they included this area right here as the supply zone and drew it over. And then you see how the price reacted off it, and right here you got a big bust off of that, and you got a big institutional bust off of that. So that's like a demand zone. You can see it came down into the demand zone, retested it, and busted out again. And once it broke through this supply zone, right, it was forming a possible zone was forming here. And once it bust through, right, it came back down, and now it's becoming a demand zone, because supply zones become demand zones, and demand zones become supply zones, just like support and resist. That's why I say they all cousins. Remember when I said they cousins? They all saying the same thing, just in a different way. They all getting to the same destination, just taking different streets, right? And then the last one I want to talk about, which I never use at all, but I want to throw it in there, is pivot points, right? Pivot points. I Well, I ain't gonna say I don't use them at all. It's a certain type of pivot that I use. It's a mental pivot that I use. It's the previous day's high and the previous day's low, or the previous week's high or the previous week's low. It's like that's a mental pivot point, because a pivot point can be a high or a low. But it's another pivot point that I don't use at all, and it's like like if you can do it on, like, they have like a whole formula to calculate the R1, the resistance 1, the resistance 2, the support 1, the support 2, like when it can be calculated, and like the R's are below the pivot point. I mean the R's are above the pivot point, meaning it's like the price action is being bullish because it's going up to a resistance point, and then the S's are below the pivot point, meaning the price action is being bearish and it's moving down to a support point, right? And you ain't got to worry about doing all the math yourself, because it's an indicator on most platforms, if I ain't mistaken. But if it ain't on your platform, they got it on barchart.com, and I'll show you how to get to that too. But if you want to be smart and impress your friends at a party, right? If y'all gonna have a Halloween party tonight, I'm gonna show you the the formula right here on how to calculate it, right? Let me blow it up so you can see it, right? The formula for pivot points. The pivot equals the previous high plus the previous low plus the previous close divided by 3. That's the pivot, right? And then the R1 is pivot times 2 minus the low. R2 is pivot plus the high minus the low. And then support 1 is pivot times 2 minus the high, and support 2 is pivot minus the high minus the low, right? And then if you want to impress somebody to act like you know something, tell them that at the Halloween party tonight. But barchart.com has this already. You ain't got to know how to do that. If you go to barchart.com and I show you how to include the pivots, it's on there. But I never use those. But if you watch it, a lot of other people use those, so price tends to react to those areas, right? Ain't nobody doing no what's name. So before I pull up my charts, man, y'all know what I got to do, man. I got to shout out my family, man. I got to shout out my family, and y'all put your stuff in the chat if you do something. First up the bat, as always, y'all know who it is. My little sister Kiki Williams, man. Stocks that freedoms, baby. If you want a great mentor, if you want to join a community, Kiki is a awesome mentor. She got a great community called Stocks to Freedom that I'm a part of. I'm in the shadows right now, but I'm still there. I still love y'all. P-Dub Consultant, he's a part of Stocks to Freedom. He's a great mentor. Stock Baby, he's a great mentor. He's a part of Stocks to Freedom. The Come Up series, y'all know I talk about Mark and Jolene all the time. They go live on Tuesdays and Thursdays. If you don't know, now you know. The world famous Bun Bullets. If you want to know about trade and futures, get at my boy Jason Sweetie, Jada Trade on Instagram. First Gen Wealth, aka Run It Up, Zay, the homie Stock Zay. Go to Stock Zay if you want to know anything about technicals. Stock Zay is probably the best person I've ever seen with technicals. Learn with Lex, the little cousin Lex. She got Learn with Lex. She won't let me in her Discord, but Lex is amazing when it comes to them fundamentals, man. Lex is amazing with fundamentals. Learn with Lex. Finance on Fleek, Big Draco in the building. She got Finance on Fleek. She got that other one that I always messed up the name. Draco put the other one in the chat. I can't remember. I always messed up. Uncle Charles. If you trying to talk to a consultant that's going to tell you how to get your financial future together, Uncle Charles is the man. Anything Uncle Charles breathe on turns to gold. Let me tell y'all how Uncle Charles think. When all of us be looking at like, man, it's a supply shortage, man, what we gonna do with this? Matter of fact, let me and then Wall Street Trapper. Y'all check out Wall Street Trapper. He a good dude too. Let me pop the camera on it right now to tell you how Uncle Charles be talking. Like, everybody be like, man, it's a supply shortage. We got to figure out what company gonna be affected by it. AMD, they need their chips. Such as Home Depot, they need their wood. All these people need this right here. Uncle Charles be like, what company make seals for the shipping containers? That's the kind of stuff this man be talking about. And the next thing you know, the company that makes seals for shipping containers go like 55% in one day. That's how that man think. Get at that man. Follow his Instagram. He be dropping so many gems in his Instagram. People just don't know, man. Now, let me pull up my what's the name? I'm gonna pull up first I'm gonna pull up bar chart to show you about that I'm gonna show you how to get to that what's the name? The pivot thing on bar chart real quick. Barchart.com. So you go to barchart.com. Let's just put in XLK. That's my baby. I love so then you come over here. I don't know how big that is. Hopefully y'all can see that, because I can't blow up the you come over here on the left hand side over here, and it's a thing called cheat sheet, trader cheat sheet, right? Let me baby, let me know if that's big enough. Can you see it? I'm gonna try to make it. I can't even make it. Oh, I know what I can do. I can just increase the size. Let me see if I increase. Yeah, make it. Oh. Yeah, I increased the size. I just try to increase the size. See if that make it better. Increasing the size doesn't mess me up. Increase the size just messed me up. Now I can't see my what's the name? I gotta decrease the size. Increasing the size ain't gonna work. Okay, y'all just gotta believe me on this right here, because I can't see what I need to see. But if you come over here, it says trade a cheat sheet right over here where I'm moving the mouse right around this area here. If you click on trade a cheat sheet and get the ad out of your way, right? Then it pulls up this screen right here, and it's got like a bunch of little check marks you can do. I might be able to blow this up some. Yeah, I can blow this up a little bit. Yeah, so all these checks, see right here where it says pivots, you want to include the pivots, and the other stuff you really ain't got to include the moving averages, because everything you include, it puts it down there. You can leave the high lows if you want to put the RSI on there, whatever you want to put in there. But right now I'm just going to put the pivots in the high and low. So if you look at the price, right, how I say the last, and then it say this is the pivot, and then it says it got like all the 52-week highs and move the highs and lows. And it says pivot first resistance, that's the R1, pivot second resistance, that's the R2, R3, and then down here say pivot first support, that's the S1, that's the S2, and it's already calculated for you on this stock, and it's based off of the high, the previous high, the previous low from like the trading day before. So that's how you get the pivots right there. I don't do the pivots. I don't mess with that. Now let's get into trade and view and talk about how I do my levels. If you talk to 30 different people, you probably gonna get 40 different ways on how they do their levels, right? Let's pull up old Splizzy, the Splizzy. We're gonna pull up the Splizzy. And so the way I chart my levels, right? Let me hide these moving averages right there. Hide the moving averages. Hide that right there. Okay, so the way I chart my levels, right? I squeeze the chart down like this right here. I put it on daily candles. Now, the time frames you chart is going to be based off of like the type of trader you are. I do mostly swings, so I start out charting on the daily level, right? I believe that the daily trend is like the best place to get the overall trend. The weekly trend is good, but the weekly trend is going to miss some of the nuances that I like to see, because the weekly trend is just a higher time frame. Like the farther out you're going, the higher time frame you need to get your trend from, right? If you're going out 2 years, a weekly trend, a monthly trend is going to be good for you. If you're swinging for a few months, like a daily trend is going to be good for you. So the farther out you going, the higher time frame you want to get your your trend from. So what I like to do, I like to shrink it down to where it's like almost indistinguishable. I can't even tell, like, you know, where the candles start and end. And the reason why I do that is because I just want to see all of the points where price reacted and went the other way. It was like a violent reaction to it. That's what I want to see. I ain't gonna go way back. I'm just gonna do it like right around here, because it's kind of self-explanatory once you say it once or twice, right? So what I like to do, how the price coming up right here and then it violently went back down, right? I'll just stick a line right there initially, just put it there, because I like to rough my lines in and then go back and like kind of tweak it. How it, it just, this is a long, like when the wicks are like super long, it's like I go back and see if I want to include them on the tweaks. So if it's like a super long wick, like I can see that's distinguishable, I'll just put it at the bottom of this candle right here, because that wick is like super long. And what the wicks is in my book, the wicks is like you was bad enough to take the price there, but you weren't big and bad enough to keep the price there. Somebody bullet footed you. You know what I'm saying? So that's why I kind of ignore the wicks if they're super long like that. You know what I'm saying? I'll stick one right there because the price went down. You know, I just want to see where the price violently reacted initially. When I'm going through doing this, I'm just looking for where the price reacted violently, right? So once I do, this is just the way I do it. Boom. Once I do that right there, then I go through and I start to tweak it like on different time frames. I'll start to tweak it on different time frames. And then that's enough. That's enough. I just go through and I look at it like that right there, and I go that was on a day. So then I'll drop down. I'll look at like a 4 hour. I'll look at like a 4 hour, right? And then when I look at the 4 hour, if you notice on the 4 hour, the 4 hour candles are still respecting those areas. You see what I'm saying? Like they poke that, like this area right here on this 4 hour, I will put that as a 4 hour level. You know what I'm saying? Right there. You just want to see, you just want to keep dropping down into the different levels and see if the price is still respecting those levels. And if it's something in between those, let's drop all the way down to an hour now. We're going to drop down to an hour. So we're going to go down to an hour time frame, right? We're going to go down to our time frame, and you still don't want to be able to like really see. I still don't really want to be able to really see it yet. You know what I'm saying? Because these lines was made on a daily time frame, right? And then so now I can see right from an hourly time frame, I would stick something right around here from an hourly time frame. Let me change the color of that right there. I will put something there. I'm just going to pick a different color. I'm going to put that as blue. I don't know, that blue might not be good for y'all to see. Let's pick red. Okay, we're going to put red. We're going to put a red candle right there in the hourly area right there, because on the hourly chart is reacting violent. Is reacting violent right here. I still don't want to be able to see like the actual candles yet, because right now I'm just looking for where the price moved violently away. And the reason why I don't want to see the candles and I'm just looking at how they violently moved away is because my trading style is swinging. So with a swing, my levels ain't got to be pinpoint to the penny precise, because my trading style are swings. So it's like I want to see where the price just said nope and turned around and left for that day. That's what I'm looking for, because I want the daily time frames, because I'm making my swing decisions based off the daily time frame, and the price said nope at that time of day and it took off. I don't care what it did intraday, because I'm just worrying about what happened for that day. Now, if you are a day trader, Or if you're trading on a weekly time frame, then you want to keep going down into the hour, into the 15 minute. You want to keep dropping down into these lower, like right now, I'm on a 15-minute time frame, right? You want to keep dropping down into these lower time frames because even, I know y'all like, Tim, it just look like ants on the screen. You just want it to look like ants on the screen right now, because now you can see on this 15-minute time frame, it was something going on right in here. I'm gonna put a line right there, and I'm gonna make this line that's too close to red. We'll just make it green, and I'm gonna make it fatter. I'm gonna make it fatter so you can see it. On a 15-minute time frame, a day trader, this was an important area to that day trader, because if you see this, it came off this daily level, right? It came up past this hourly level, and then it kind of went back and forth with this area right here between this hourly level and this daily level. It was bouncing in between this area on a 15-minute time frame. So as a day trader, this area right here was important. So you would need to have that marked on your as a level on your chart, because your price is reacting to that. And a day trader, especially if you trade in options, this right here, this is either going to be killing your premium or you're going to be making money because you know what's going on. So it depends on, like, I don't want to really get into this is the exact way you mark these levels. Like I say, I'm all about why I'm doing stuff, because it's a million. Like, if you want an awesome charting class, Kiki got an amazing charting class. Jay the Trader got an amazing charting class. Zay, he got an amazing charting class. If you want charting classes, it's people that got amazing charting classes, but I just want to share with you my why, my thought process of why I do it. So basically, that's why I put my levels where I put them. I'm a swing trader, so I start on the daily level, and I want to see where the price is. Hold up, I'm turning around on this day, right? And then I go down to the 4 hour and the 1 hour, you know what I'm saying, to see where on the 4 hour they say, this kind of an area, or on the 1 hour, this kind of area, because I make my entries roughly on the 15 minutes. So I'll be trying to get my best entry I can, like around the 15 minute. But whatever you trade, if you're a day trader, swing trader, long-term investor, you want the overall trend. You looking at like a weekly and a monthly trend to find your entry when it pulls back to a certain level of support or resistance to buy your shares. If you are a long-term leap swing trader, leap trader, you're gonna look at your weekly and your daily to find your where you put your levels, on the screen. If you do like 3-month swings, you're going to be looking at your daily levels as the important levels to be trying to get your entries for your 3-month swings. If you're a day trader, you're going to be marking your levels as low as the time frame that you trade. Get your bias from the daily. Mark the 4 hour, mark the 1 hour. If you trade the 15 minute, mark the 15 minute. If you trade the 5 minute, mark the 5 minute. If you trade the 1 minute, mark the 1 minute. And every time you keep going down and see where price said, nope, it's time for me to turn around. And that's where, and them the points where you want to mark your levels, because as it goes to that point, support becomes resistance, resistance becomes support. And then once you get your asset, your levels marked, back test it to see if it respects it. And then not only back test it, keep paper trading it in the future to see if it's still respecting those levels. Because what I do, it's like I watch my levels, and like for like the past, I look at like the bodies in the wicks. But as we start making new bodies in wicks, if I start noticing, okay, the buyers are stepping in sooner, or the sellers are stepping in sooner, like if that becomes the pattern, then I might adjust that level, because that level is no more good anymore, because now I might have had it marked here at 437, and now they're stepping in at 440. So and it can't break back down below 440. So I'll eventually adjust it if I notice, hey, my asset had like 437 ain't a level no more. You know, so man, that's my spiel on levels, man. That's my spiel on I save everything. Trend, I save everything. It'll be on my IG page. That's my spiel on levels, man. If y'all got some questions or something you want to say, ask or say in the comments. I'm gonna scroll back through here and see if I missed any. Did you see any questions, baby? See if I missed anything. Oh, I see Lex in the building. What's cracking, Lex? Lex a million. Let me see if I missed it. Did anybody ask any questions? When the merch dropping? When the merch dropping? I don't know.
Well done. It's just being recorded. I'm at work.
Yeah, it's yeah, I saw that one. I don't see I ain't seeing no questions. What about the okay, what about the 180 or 90-day 4 hour? Um I think I kind of answered that, but in my opinion, it's about like your trading style. You start at the highest level where you need to determine your trend. And personally, I think the daily level is a nice sweet spot to start to determine, you know what I'm saying, where you want to mark your levels in respect to the trend or the direction that the asset, I mean the price action of the asset. And then I know some trading platforms call them by the days. I don't really know them by the days. I go it by the time frame, like daily, 4 hour, 1 hour. I think the 180 day is the 4 hour, but like I said, I don't know it by that, but I do it by the time frame. So mark your time frames and go as low as your trading style needs. Daily or 4 hour for swing trading, all the way down to 1 minute for day trading. Just whatever time frame you make your entries on. This part of trading is makes it our monthly,
Somebody
weekly.
asked about your trading journey.
Some my trading journey. Um, I done shared my trading journey before. We ain't gonna.
Just a couple people. They said, tell them about your walk away.
That's gonna be tomorrow. Walk away tomorrow. We doing we doing tips on the walk away tomorrow.
Do you use the daily for futures as well?
Um yeah, everything I trade, I start with the question was, do I use the daily for futures as well? Anything I trade, options or futures, I start at the daily to get my bias, and then go down to the 4 hour and down to the 1 hour. With futures, I do futures a little bit different than I do my options outside of the outside of the SPY or the SPX, because with the futures, I really don't draw levels no more. It's like I'm still learning how to watch the price action. I've been practicing that for a while, and shout out P Dub the GOAT. He just done unlocked something in my mind that's like got me blown away. So yeah, I don't really I be watching the price action. How you feel about the CUB doing?
I see you reading that question.
Oh, how I feel about them coming out with 25, I mean 2025 and 2026 leaps. Um, be honest, I didn't even know they was coming out with 2025 and 2026 leaps, but I probably wouldn't even do it.
100,000 a piece.
I probably wouldn't even put a leap out that far, even if they did come out that far, cause you need a whole bag to put a leap out that far.
The
Um,
dealers say they're going to take folks' money.
yeah,
And then she said it's going to be 100,000 a piece.
I wouldn't even put. I tell you, I wouldn't even like when I put on. I'm gonna tell you like this: when I put on a 2 year leap, I got an exit plan, right? I got an exit plan. I know how much I want to make on this position, and okay, we'll get into. I'm gonna give this gonna be a free tidbit. It ain't about levels. Okay, any position you put on, it can be a 3 month swing, 6 month swing, yearly swing, 2 year leap. When you Put it on before you put it on. Know your exit. Have an exit strategy. Exit strategy to the downside, exit strategy to the top side. Don't say I got a mental stop. Mental stops, in my opinion, you're lying to yourself. Because I was lying to myself. Put your stops on, put your targets on. Once it hit your target, what I do, this is my thing. If I got more than one contract, I shave at the point where it's no longer a risk to me. Let's say I buy 3 contracts for $100, right? When I can sell, when I buy 3 contracts for $100 a piece, so that's $300, right? So when I get to $400 in profit, I'm gonna sell 2 of them because my risk is off the table. I got $100 profit, and I'm gonna leave one on. So now that one that I got left on there, it's just pure profit, and my risk is off the table. Even if it's a 2-year leap, once I get to a point where I can take the risk off the table and leave the rest of them running, I shave and I let that ain't always been my philosophy. I used to try to leave everything on because I wanted the whole bag. I wanted everything to get to my target. Once I get out of the risk zone, I shave the risk off the table and let the rest of it run. But I don't just let it run and it come to zero. I still got an exit strategy for the one that I leave on. That's just I shave. If I hit 100%, I'm shaving 75% of my position off rip. 75% of my position gone if I hit 100%. And then the rest of it, I let it keep going. And if it start pulling back too much, I get out. If it look like it's going to go the way, I get out.
Salute King said, I'm assuming they just announced it today. Salute King said just announced today.
Oh, they all talk about making them wait out their leaps. Yeah, I ain't even messing with them leaps. I ain't trying. Man, I paid off my car early. I paid off my house early. I ain't trying to stay in nothing that long. I got committed. Only thing I'm committed to is my wife. That's it. You feel me? Hey, man, I ain't being committed to what? Committed to a job? What? Man, I got options. I buy them, I sell them. Y'all stop playing with me. Does the VIX or historic volatility influence when you enter your like the VIX don't I do everything based off levels. So the VIX and the volatility don't influence my entry. My entry is based off of a price point and the way the premium going. If the asset hit that price and the premiums are inflated because of volatility, I'll wait. So it does influence it like that, but it don't influence my entry. My entry is because the volatility gonna rise around earnings time. It's gonna drop off after earnings time. That's kind of a given. But I don't do it based off the VIX. And one thing I do with the VIX, shout out P-Dub, he gave me this gem. When the VIX start dropping, you know what I'm saying? Like, just say if the VIX drop down to like 14, 15, even $16, you know what I'm saying? I'll jump on a call for like next month after, like, close to the expiration or close to some news. You know what I'm saying? I'll jump on a call because I know it's gonna spike around that time for expiration and time for news. If it's way down there, matter of fact, I just sold a VIX position. I had got into like a $16 November, and when the market dropped real sharp the other day, I took some profit on it. I think it wasn't no big profit. It was like 30%, but I was young because I knew it was gonna turn around and keep going back up.
Where you get that shirt from, Tim?
Oh yeah, this the merch. This the merch that I'm gonna be selling. I got options. I buy them, I sell them. This the first shirt. You know what I'm saying? I got to get my samples. Make sure I like it. Do you look at the IV percentile? Implied volatility, again, I don't do the only thing I do with like the implied volatility is I watch it around earnings time, because the IV crush will kill you. Like, if you in a position and it's coming up earnings, I wouldn't hold it through earnings, because after earnings over, once they know Once everybody know the news, or if the IV, if some news coming up like at FMOC, uh, 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 what have you said, and everybody anticipating something, the implied volatility might spike up, right? I'm getting out the position before the news come out or before the earnings come out, because the IV crush gonna kill the premium. You know what I'm saying? You'll go from being 75% up to 50% down because the IV crush kill you. But I don't really. Only time I pay attention to the IV is like during like high news times and high earnings time. Like when big tech and all that gonna be reporting, they be trying to rape you on the premiums.
Boy said, when is the wife walk away plan?
We got a plan, boy. Mind your business. We already got a plan. Me and my sweetie got a plan. Alabama. What I say? What is that? Alabama Apple on Thursday. Talk about the earnings. Okay. Apple reporting. Oh yeah, Apple do report Thursday. Yeah. I think they do report Thursday. Let me see. No, they reported already. Apple reported, last week. Yeah, they reported Thursday. Oh yeah, and then they fell off a freaking cliff. So they fell off a cliff. But peep it, they wanted to bring that down so they can run it back up. They wanted to bring the market down so they can run it back up, because you got to sell it down to go higher. Y'all got enough? How long I been on here, baby?
It's 3:55.
I've been on here for 45 minutes, man. I'm over my time. I usually try to keep these to 30 minutes. I try to keep them to 30 minutes. If anybody just coming in, this gonna be recorded. It's on my page. If you want to get the slides, they in the folder for Tim's Tidbit slides. You don't have to give me anything to get the slides. I don't want your email. I'm happily retired and I don't want to work for nobody, so you don't have to give me anything to get these slides or try to keep in touch with me. I appreciate y'all for checking in, man. I'm still doing it tomorrow at 3:00. It's gonna be tips for creating the walkaway plan. Spoiler alert, I'm not going to be giving no magic wand to make everything happen overnight. It's probably going to be the same stuff you always heard. It's just going to be from Tim Rogers' perspective. That's a spoiler alert. But it's going to be tips for a walkaway plan. And Lex, I will share my walkaway story again in that, even though I done shared it 500 times. Okay. I'm going to share my sweetie said, just share it. I got to listen. Yes, ma'am. What's up, nephew? Quanny in here. Quanny in the building. That's a young bull. Quanny, Lex, everybody inspire me, but Quanny and Lex, they inspire me because I got daughters older than Quanny and a daughter that's Lex age, and Lex is out here doing this, like investing. Lex ain't even trying to go blow her money. Lex figuring out ways to save money, to reinvest. Lex moving money from this asset to this asset. Cause man, and Quanty, this young man right here. Hey man, these people they inspire me. They inspirations for me because I know it's hope for the future, man. I know it's hope for the future. So with that, I'm about to get in my feelings. Y'all know I get in my feelings. But with that being said, man, appreciate y'all for tuning in. Tune in tomorrow because we're going to be doing the tips on the walkaway. I'm going to give my tips on creating the walkaway plan, and I'm going to share my walkaway story. Spoiler alert, I'm going to give you my walkaway story right now. God is good and my wife was amazing. Thanks for tuning in, man. I'm gone. Yeah.